We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovic. Joining me today is David Murrin, global forecaster and author of Breaking the Code of History and Lions Led by Lions. Thanks for joining me today, David.
It's great to be back, Tom. I loved our first podcast, so it's a privilege to be doing it a second time.
Me too. I was looking forward to this conversation literally for the last 3 months. I couldn't wait to get you back on and to, let's say, have part two of our conversation.
Well, it's very touching, Tom. Normally it's bananas and tomatoes at dawn. So thank you for your welcome.
Well, you're such a wide-ranging thinker that I appreciate getting to really have these types of conversations with you. Some of the best stuff, unfortunately, isn't always recorded or captured on the video on the podcast that we have. And so there's a lot of those thoughts that I want to be able to kind of dive into today with you. So, the last time we spoke, David, you had predicted the war in Ukraine, an event that did surprise many. So when we pair that with the US withdrawing from Afghanistan, does this mark the terminal and fifth stage of decline and the contraction of American hegemony and start to encourage acts of aggression by China, Iran, and North Korea that could manifest later this year?
Absolutely. It's all coincident. That whole process, in effect, the crystallization of a failed pilot war in Afghanistan by a precipitous withdrawal and rout by Biden signaled that the hegemony of its time, America, was now fair game for assault. Once that happened, we were just waiting for which shoe would drop, and the most likely shoe being Russia with the agenda that Putin had. So, and the mechanisms of wealth generated by the commodity cycle, which gave Putin his new weapon systems and confidence, all coincided to a very clear prediction of violent action. We're now sitting waiting for the other shoes to drop. And just because they haven't doesn't mean they won't. Mm-hmm. I think you need to think about China's basically not just going to go after Taiwan; it's going to simultaneously go after South Korea with its satellite state that is already armed for the task, and that includes Japan as well. So you're looking at a regional war all at once next, not just a Taiwanese event. Mm-hmm. And what is very scary or concerning is that through the timidity of the timid response of the US, initially scared by the nuclear threats that were designed to push America out of the sphere of conventional battle, and the subsequent responses, which is essentially to bleed Putin to death. We think that's a logical response of below the threshold of any nuclear exchange within Ukraine, which is outside NATO. We think that we're going to bleed him dry, and we're going to feed weapons in it just enough of a pace just enough so that he can't get anywhere, and gradually he becomes weaker and we become stronger. I think that's the most erroneous construct you could create, because every war is like a petri dish. So if you think of the Spanish Civil War, that was where the Condor legions learned how to work on blitzkrieg. So wars let you try new mechanisms, fine-tune them, so then you roll them out in scale. And the Russians are adapting slowly, but they are adapting because they're at the bottom of the curve of capability, and they are moving up that curve. But the people that are really gaining are the Chinese, and they're watching, war fighting techniques in Ukraine, especially with the advent of drones and their capability, and understanding that if they employ those en masse, they just happen to have the greatest drone production in the world, then they suddenly can create a breakthrough. So I think this bleed them slowly thing is really a very dangerous mindset. It's also dangerous because we are at war with Russia. How can we not be at war when we provide their weapons, we train their people, our special forces are in there, our intelligence gathering forces are active in passing the information to the Ukrainians? What part of that is not a war? Mm. And America is involved in Lend-Lease, and Germany viewed that as a war act when Lend-Lease supported Britain, and the U-boats started torpedoing the ships. So wake up, world. The West is at war. So why don't we reform our economies to be more resilient? Why don't we spend more on defense and start signaling to Xi that we're preparing to deter him effectively, rather than sitting here, with our fingers in our ears, saying this is something that we're not doing. Mm-hmm. So the level of collective delusion from our leaders is pretty scary.
Well, when we think about the differences between the Western or American way of governing, really. And we compare that and contrast it to the Russian, system or the Chinese system, where, they really have the ability to think about and implement these long-term plans. And that system is really designed to be able to achieve those longer term goals rather than these short, kind of back and forth cyclical undoing of the last leader kind of thing that we have in the West. Is that, just from a strategic standpoint, far more advantageous
So
system?
I think absolutely. I mean, one of the things, even America was a democracy on the way up. If you think about from World War I through to although you had Democrats and Republicans, they actually had fairly standard value sets, so weren't too extreme. Mm-hmm. And that was about the expansion of the American system, give or take a left turn or a right turn. The problem is that once you roll over the top when you're into decline, since we have been in 9/11, the polarization of the difference in wealth distribution and wealth creation increases, and the whole agenda becomes more extreme, especially with reference to defending the empire, defending the borders, and you get more and more extremity, and you tend to get the wealth distribution merchants who tend to be liberal, and I think liberals begat more aggression because they deny an aggressor's desire to attack them, and therefore they get attacked. So it's more a function of decline than democracy, funny enough. On the way up, democracy was, and in Britain and America, was really quite good by having relatively standard strategic constructs. But now it's very extreme in decline. For Putin, obviously, he's had a plan for a long time, and she's had a plan for a long time. The biggest advantage they have is that they can enact conflict without referring to the collective psychology of the people. So they can always surprise when they attack. Mm-hmm. The problem for democracies is we have to mobilize our population. So we have to suffer some kind of setback before the population says do something. And that means there are no elements of surprise in the Western system. And we are just going to be surprised by a hegemonic system that can choose its moment, that has an aggressive agenda.
Mm-hmm. So what economic ramifications do you see coming as global trade really has become more bifurcated into a Chinese and non-Chinese sphere of influence? Is this a process that takes time to play out?
Well, it is already. I would argue the Waterstone moment was March 2020, when the Chinese shifted from a manufacturing export-driven market, which is what they had got us to create by building their manufacturing base. They'd gone far enough with that process. Their covert challenge was now revealed, and they prepared themselves for an overt challenge. And obviously Trump's trade actions have shown the vulnerability of the export-driven cycle. So they shifted to that Nazi 4-year plan of internally fueled consumer society. And I think the withdrawal of manufacturing for export is part of that pattern, even though it's masked by supply chains and logistics. It's a fundamental trend of the Chinese system becoming independent of the Western system, and it leaves us without a manufacturing base and highly susceptible to lurches and leaps in inflation. And that is their design. And we can feel that on the push of that on our financial system. It's not just input inflation increases. It's also, where do you get it manufactured? How do you get it out there? Where is it? The thing we call supply chain constriction. It's much more fundamental. And at the end of it, I see total bifurcation. I mean, until the point where the Chinese have, if they seek to take over the Asian basin and they own the whole of Asia through conflict, then that's their microcosm. They secure their resource chain for oil into the Middle East. Then in the West, we're going to sit just waiting for the shoe to drop, because their manufacturing base will be without peer. They can build any kind of weapons in any numbers, and we will be on the back foot. So that war that potentially Xi seeks to initiate over Japan, South Korea, and Taiwan, if we lose that war, we just don't have a way back. We have to, be a forward-thinking, offensive, defensive mechanism, and we need China and Japan as our ally, because it's a major industrial power. Its economy looks like it flatlines, and it's a bit like Britain was to Europe in World War II. It's the aircraft carrier of the region, and it's a supply base that lets you attack the hinterland of China. So in many ways it's just a massive replay of the European conflict with Germany. Some real parallels there.
Mm-hmm. So one thing that's been on my mind as this theme of deglobalization starts to play out after the pandemic is wondering how China will really adapt to being much less of an export economy. In what ways are they going to change to continue this ascent in the world?
Well, they've really shifted to an internally fueled consumer society, where that growing middle class has become the consumer of their manufacturing base. there's a gap, which, was an aggressive gap because Xi's time frame is to dominate the world by 2030 through his demographic problems and the rise of India behind them. And that gap is, I think, being filled increasingly by arms production. And as they really get going, that capacity will be used up, much as American capacity was used up, when it started providing weapons for Britain in the 40s, so in 1940. So I think you're going to see the arms race fill the gap as long as they can get the resources to do it. And of course, they've been stockpiling raw resources since 2020 on an epic scale.
So one of the ideas that really struck me from our last conversation that wasn't recorded was the difference between lateral versus linear thinkers. So can you give us kind of a quick overview of the differences?
Yeah, I think man's origins really go back to hunter-gathering, which is in effect a creative lateral process because it's highly adaptive. Every day you have to be adaptive. Every day is different, even though there are obviously better ways to hunt than others. It makes you adaptive. And then somewhere around 10,000 years ago, we became agrarian. And in the agrarian process, predictability and regularity became something that was common to people that practice farming. And there we ended up with a huge population surge. And so you ended up with this injection of a more linear thought process, which was land-based and agrarian, versus a hunter-gatherer maritime sort of process, which was lateral. And we've now got a composite human system of two very different ways of thinking and acting. So predominantly leadership in entropic and challenging situations suits lateral thinking. So most great war leaders and strategists, even great politicians, they're all lateral. But times of stability where incremental decisions are made can be occupied by a more linear thought process because it's about the continuation of the same. But that domain is quickly ended when something unexpected comes along and there is a failure to adapt or respond. And that can be a natural disaster, or it can be the challenge from another system. So we live in this sort of dynamic tension. And my work shows that basically expansion of empires are driven by lateral thought processes. As they become established monopolies, they throw their mavericks out. And then as you start to go in decline, the linear thinkers are holding on to the reins tightly, thinking they've got control in large institutions. And the truth is, it's out of control. They're non-adaptive, less productive, and the system is actually in a process of decline and collapse. Mm-hmm. And that sums up where the West is right now. Mm-hmm. So, and as I mentioned to you, it's the story of, Top Gun and Maverick is the perfect story of an individual lateral creative man, like barely tolerated by the organization he lived in and protected by someone who was lateral but cloaked in a more linear set of clothes, who saw the future of that person being needed somewhere. Mm-hmm. And of course, the moment Iceman dies, then of course his linear boss fires him and says, I'll take over, and comes up with a cunning game plan to travel at half the speed. And as one of his pilots said, but that means we'll never make it. So he was presenting a failed plan without any creativity and just wanted power for the sake of power, because literally this dynamic between lateral and linear at times is completely intolerant on both sides. In war, lateral leaders will wipe the floor with linear leaders. But in peacetime, with large organizations, it's the lateral people that get spat out the side, and each side will do it mercilessly. And as we talked beforehand, what's really needed is greater understanding and how to integrate those two mechanisms at critical times and when to pass the baton and when not.
So why is the path forward really dependent on having lateral thinking leaders and a sober analysis of where the West is in its cycle here?
Because the West is America is in terminal decline. By definition, that means its institutions and leadership, like Biden especially, are dominated by linear thinkers, and they're facing an expansive system in the form of China, which is actually fully lateralized. So if America is to match the adaptations of China in its challenge, it's got to increase its rate of lateralization to become equally as adaptive. That's critical, because it doesn't matter how good or big your system is, someone will find a crack to get in if they're creative. Mm-hmm. And at the moment, we've lost that. In Britain, we're in a slightly different part of the cycle. We restarted our cycle with the Thatcher era. We've been through our first stage of regionalization with a civil war. And our the trouble is that without a war, thank goodness, but without it, we haven't completely changed the linear system to a lateral system. We've got like a lateral version of leadership, which is Boris, with no linear discipline. On the other side, we've got like a linear government system, which doesn't work. Mm-hmm. So we're sort of half pregnant. And whoever gets in next has to complete that piece of social engineering to lateralize Britain to make it able to be competitive. Mm-hmm. So Britain is the only country between Europe and America that has any chance of lateralizing in time. The rest of the lateralization is going to be isolated. So it's going to be Biden's replacement, if we get that far. It's going to be heads of the military, desperately hoping the heads of the US Navy are more lateralized than ever because they're the front line of defense. So, certain key areas, I think we can safely say the world of finance is completely linearized, having received the printing of money for, the past 2 decades. The beta trend and riding that trend, is a given amongst that community, and they cannot see the adaptations needed to survive this high inflationary environment and the collapse of what I call the Doomsday Bubble.
Mm-hmm. Yeah, and those are a couple of themes that I want to get to with you here. But as we think about cycles, we've spoken before on the show about the fourth turning and Kondratieff cycles, both of which I believe fall on these 53-year time cycle lines. So, how does this apply to the commodity markets?
So, I'm going to talk about Kondratieff because that's more the cycle I'm into. Mm-hmm. His work was a 56-year cycle, give or take a bit. And essentially think of it like a sort of a hump. So you start at year 1, you spend 26 years going up in 3 waves, A, B, C, and then you spend 26 years going down, A, B, C. And every one of those peaks from 75, 1914, back to the American Civil War and the Napoleonic War, triggered conflicts because conflicts are triggered by resource competition. And the cycle you get within it is really an ABC up and an ABC down. So if you look at this cycle, we started in 2000, we kind of peaked in 2010, 11, food security issues screaming in the world, commodity issues. And then we spent 10 years going in an anti-inflationary cycle to the bottom of 2020. And now we've started this 5 to 7 year super surge, of which we've just had, I believe, we've just seen the first surge. So everyone thinks commodities are going higher. Everyone thinks inflation is going higher, but it's a bit more complicated than that. I think we've seen the first commodity surge, and we're about to have the wave 2 correction. So where does that come from? It comes through the collapse of the equity market and the collapse of demand because people just haven't got any appetite to buy, and everyone's caught with their pants down. So then you end up with a wave 2 as equities absolutely tube. And then you end up with a wave 3 because wave 3 is ultimately about Western competition with China and fighting over whatever resources are left. And that goes through the roof along with inflation. So we're in this when I've been using the word stagflation, this is super stagflation. Stagflation doesn't do it justice. This is a collapse of the asset prices. This is a collapse of demand. And this is initially a pause in inflation, not a collapse in inflation, and then essentially a super surge in inflation. And if you think of the 75 peak as being 15% US CPI, 15% rates, and how difficult it was for America to cope with that when it was actually at its strongest, well, we're in decline. It's fully leveraged. So let's just think of that process of being doubled. And where do your other inflationary dynamics coming from? Well, they come through supply chain reversals from China, which you talk about, and this wall of the printing of money, which is going to bite us in the arse in the most phenomenal way. So I don't think we're going to 15 or 30% somewhere in this move to 2025. I think we're going to absolute hyperinflation. And we're going to be really lucky to get through it because as a consumer society, it's the worst experience we can have. Mm-hmm. So if you're looking at holding on to your money and you're just preserving capital, the challenge you have right now is huge because whatever's worked for 20 years, I guarantee you that won't work. Because the people that keep that strategy will lose everything they've gained. And I think a lot of people that have made money out of asset appreciation will lose all of it and more in the asset collapse because they never understood they were just on a wave of money printing and they never got off in time. So all the great heroes, even Musk, all those people, they'll all end up, in the wrong place because they'll believe it was them rather than the environment and not smart enough to get off the train. And most asset managers who believe in, small incrementally, returns with low volatility, I'm sorry, but the bin awaits you because with high inflation, how can you justify small incremental returns when you've got 20% inflation? You're dead, man. So I actually think, and I've got a theory that the old alpha generating hedge fund model is about to come back with a vengeance for the few alpha generators that can manage it, because that's the only solution, individual alpha generation on a scale not available to many. which is exactly what the initial hedge funds are about. And people tend to look upon them as leery times. But the truth is, with high inflation rates, they had to make really big returns. Big returns take, a much more volatile profile to produce. So I think the hedge fund industry that we see at the moment is just not capable of adapting because it's full of linear thinkers. The mavericks have been spat out the back. It's all about sort of borrow money and, LIBOR plus returns. And I think they're really in trouble. The equity managers, they're in trouble. The bond managers, they're in trouble. So you're looking at where do you go? And there are a couple of avenues that I can clearly see through this, which we talked about before we started and talk about. But I think this is a very unique paradigm change. It isn't just something you can observe and go away and have a holiday and come back. You either actively manage it with a completely different strategy or you don't get through it, which is my biggest concern for just Mr. Joe Blogg and his pension. He's about to get his completely cleaned out, or he or she, and with the belief that a lifetime's work gives me the ability to retire. And I'm really concerned about that because this sort of beta trend linear thought process in asset management is terrible. I mean, look at the damage they've been through this year. They've suffered their bond portfolios, suffered their equity portfolios. There's pain everywhere.
David, maybe for those of our listeners that aren't familiar with the terms, what is really the difference between the alpha and beta models as you see it?
So a beta return profile is really a trend follower. It's basically an index stuff. You bought the index went up, and you take money from it. An alpha generator is someone that, the index went down, went up, went down, and you still made money from it, as in they extract directional returns, which are not just a one-way trend. And that's what the great hedge fund managers were. They were alpha generators. And the great opportunity in that process is in a financial system fully of linear thinkers, the pickings are really rich. And, as we talked about earlier, global forecaster, instead of setting up like a hedge fund where I'm for other people, the first step was I created a hedge fund on steroids, which is alpha generating inside the global forecaster model that people can access for the trades and ideas. And it has been generating alpha across 80 macro markets in ways I can't imagine. We were maximum short, for example, the NASDAQ and all the stock markets, 0.5% off the highs. Those were like 50 times risk returns at the moment and still moving. I mean, stuff you just dream about is available when everyone else is one way. So, and now I think the dollar's turned because basically the dollar's about to have massive outflows of capital. Why would you be in America when the bubble's collapsing? So there's a sequence of events which are really exciting. And one of them actually is what I call a safe haven washout. When we last spoke, I viewed gold and silver as being your safe haven, and I still do. But there's a caveat. Having bought at the bottom of the correction, we got out of it after it tried to break out the top of the correction and didn't do it. And it's now back in the correction for gold, silver, and platinum. And I think it's going to flush to the downside because that's where people who are smart have their safe haven. And in fact, they're going to get flushed out of their safe haven at lower prices before it becomes a safe haven. So there's a huge opportunity in the management of that alone, which is actually very similar to Bitcoin. I think Bitcoin has always been going to 23K. We got short at, I think it was 66 and against a 68 high. We've been running it since. Target was 23, maybe 15, maybe 12 in the extremists. And then the story changes because it becomes something of interest, having flushed all the weak holders out. So there's some great opportunities if you can understand how the cogs are all moving together. And some of that requires a very different mindset from conventional safe haven thought processes.
So, when we think about in some ways, let's say the momentary collapse of these safe havens or however we need to phrase it, you're calling for lower gold prices. Is this really a function of, just people getting margin called, banks being long and needing to close those positions as really margin gets called all over the world?
I mean, there's no doubt that big price flushes in equities have seen flushes in gold and silver because of the margin relationship. I think that it's an easy place to call your margins. And so I agree with that. And, right now, people's bond equity portfolios in the US must be bleeding from every orifice. So I think that's exactly kind of what you see. The trick is there's this moment when it suddenly becomes valuable, where all those weak holders are flushed out and basically doesn't go down anymore. And that's the trick in finding it. And what is really, I think gold and silver and Bitcoin have been one of our greatest alpha generators. They're really pure sentiment driven markets. And you can see the pattern clarity as a result is quite phenomenal. So, I mean, who would ever imagine that the dollar goes down and gold would go down together? That is a really, in prior risk-off situations, there's no precedent for it. But that's exactly what this is. This isn't a risk-off crisis outside America that touches America. America is the risk-off crisis. And that's why it will be completely different in its sequence from anything before.
Mm-hmm. So can you tell us more about the path forward for the dollar? You know, we've seen new highs that we haven't seen in several years here. And you were saying that it's rolling over because of the outflows.
Yeah. So essentially, you've got to think about over the 30-year period, if you think of a sequence of 5 waves lower, we have just finished the 4th wave before the big 5th wave to stay 30, 40% lower in the dollar. And in cases like the euro and, you know, against the dollar index, that was like 3 attempts to get through the top side that was recent. It looks to me like it's really blown off. So right now, you know, we've come off the highs in an impulsive move. The correction looks short. I think we're into the big dollar decline early stages. Just like the NASDAQ, we managed to get, you know, all our clients short within 1% of the recent highs. So what I like, well, I don't really like the euro anyway because it's terrible, but it will still relatively benefit. The dollar index is a form of euro, but I really like sterling. I think sterling is the safe haven because of the fundamental reasons I mentioned about an expanding system rather than a contracting system. Mm-hmm. I think even though our government is as slow as a donkey, they'll work out that low taxation and taxation for stimulus is the only way to create growth faster than inflation or keep up with it. And Europe can't do it, and America can't do it, but Britain could do it. We could actually flat tax ourselves, get all the capital from Europe and America, and create a super high return profile. You don't even have to offer to lower taxes this year. You just have to say we have a 5-year program. At the end of 4 years, we'll have a flat tax of 20%, and all the money will come pouring in. And I do not understand why. Well, I do, because, you know, we have a chancellor who really is a single stock analyst in his professional career, and somehow, you know, doesn't have any individual thought. He thinks as a linear person, happy to give away money, but can't create money. And right now, we have the ability to create in Britain. So I think that's an important opportunity that Britain represents. The other one that's interesting is if you go and look at the Chinese currency, it came off its highs against the dollar, and then it bounced really sharply. That is just the last part of the correction. So that hegemonic currency shift, you're going to see the dollar lose favor against the yuan, and in a big way. So, yeah, I think that surge has already started, and it's going to be very profound, especially as equities start to move back through their lows. You'll see people, this flight, getting their money out of the US.
So is it not really a driver of dollar strength when equities collapse? You know, people wanting to sell equities to that creates demand for the dollar. Is that
that's exactly been what every other risk-off scenario has produced? But I have argued that this one is going to be different because it was always risk-off somewhere else. And it in America, because the safe haven, so you bought dollars and you need it for liquidity. If you think of America being the subject of the bankruptcy program, and that's the one currency you don't want. Mm-hmm. And essentially, that's what that is. This is basically a bubble that's blowing up, like 29, but squared. And in that case, an awful lot of European investors and Asian investors put their money in the States with that high growth process, and now they're going to be desperate to get their money out. So I think we will see those outflows linked to the implosion of the Doomsday Bubble.
Mm-hmm. So, you know, just to touch on, I guess, another piece of this here, if the US Fed actually does, you know, keep raising rates and thereby making the dollar a little bit more attractive, you know, having some yield to it, that still isn't enough.
Not enough. I mean, most foreign investors will have put their money into the equity market because it's, you know, stratospheric behavior. Well, right now, they're desperate to get it out. And, you know, and keeping it marginally in some US bonds for sort of less 8% of inflation and negative returns is hardly an attractive proposition. And then you end up with a self-feeding process of now you suddenly start losing on your currency, and all of a sudden the currency starts to unravel itself. Now you're caught, you know, like any emerging market disaster. And I think that's ultimately where this is going. It's the unraveling of hegemonic power in America, financial power at least.
So is the underinvestment in energy and commodity production because of really non-incentivizing prices one of the other big problems that we're facing as a population right now?
Look, I think America, for example, has the cheapest energy access of anywhere in the West. What was interesting was basically had a threshold of $40 or $50 for its domestic production, and the whole Ponzi scheme process of leverage to do it meant that wells shut down, and people got really hurt from that. So I think the legacy of going back and doing that is slow to respond. Obviously, you'll see more of it. And I see America as well and truly above its break-even prices, which gives it a cushion. But it isn't just about energy. It's about every other commodity that you pay for. Mm-hmm. So I think, and obviously America becomes an exporter and then domestically it suffers. So there's all sorts of stuff there that doesn't stop this process from basically eating into a consumer society. As for Europe, and Britain, for example, we could do far more to domestically access oil and gas. And this whole green drive, which has been I think the green drive is appropriate in terms of the goal of reducing carbon emissions. I think we're missing the point that we need to get the stuff out. It's so bad. But I think creating a paradigm where you suddenly become vulnerable to Putin through where you get your gas from was a height of stupidity, something we warned about ages ago. So you had to do it in a sort of strategically aware process. And of course, the West has had no strategic thought process whatsoever. It just has failed to recognize the predators at the edge of the field waiting to pounce. And now it's pounced, or they've pounced.
So you mentioned earlier the Doomsday Bubble. Maybe let's wrap that up with a proper bow and a proper explanation of how you see that. I know we've touched on a couple different parts of it, but just to make it explicit.
It's not just a dramatic name, right? It has a rationale. Okay, so when America entered decline in 2001 and 2003 started to print more and more money strategically after the threat of 9/11, it started the final phase of empire, which was all about printing money to compensate for lack of production. And of course, that money found a home, and it found the money in a home in equities. Through 20 years of money printing, through a series of surges from the lows of 03, you're talking about this giant series of steps of bubble upon bubble after bubble. So the reason why the equity market actually goes up, even though the system is in decline, is because it prints money in leverage, which increases asset prices. And at that stage, it reaches a peak. We can't go any further. And when it collapses, there is no way out. You've created a massive debt mount. You've increased your inflation rates to unsustainable, and your assets collapse and take away all the leverage. So it is the collapse is the Doomsday Bubble, as in it's the collapse of the hegemonic US financial system or the Western financial system. It's not just 29, and 29 was terrible. It's like the end of an era. It corrects 100 years of American financial history and longer of Western history. So it is of a magnitude it's difficult to comprehend. And I think for those listening, you need to think about secular bear market over 3 years with 3 legs. First leg is sub the lows of 2020, some kind of correction, and then back to the lows of 08. Mm-hmm. That's how you got to think in 3 brutal, phases. And why does that happen? It's because inflation doesn't stop, just keeps going up. Leverage gets rolled out, conflicts increase. Some of them, could be very serious. And there is nothing good about that environment. And lack of productivity and adaptation by America, zero adaptation and productivity in Europe, and possibly, with the right capital and leadership, could happen in Britain.
So, David, when you talk about the correction as the second leg or second wave there, do you think that that's linked to some type of Fed pivot after they see enough pain or enough things break within the markets?
Look, there will be some point at which the system is oversold, and some point at which some intervention actually might make a difference. And that's basically when one phase of a selling cycle is complete. It's probably going to be, I think, below the 2020 lows, because it'll be the terrible thing when it breaks those lows and you're moving through it. And the reality of a fundamental shift to a secular bear market will be there. And then everyone will get the message, and that's what will go back in their face. So there's always this is the maximum pain machine just whirring itself up. But central banks are not separate from the marketplace. They are just very big market participants. That's important for people to realize.
So you've mentioned a couple times here the enormous debt levels around the world. What can be done about this? Is there a debt jubilee or revaluation a possibility, or is the path to inflating the debt away the much more likely scenario?
Okay. So right now, if say I've just landed in the White House and someone actually chooses to listen to me, what I need to prioritize, what are our challenges for survival? The first challenge is to deter China from enacting conflict with a full spectrum deterrence on a completely different scale. It starts with the political intention, the firm alliance structures with Japan, South Korea, and Taiwan, where it isn't strategic, ambiguity as to whether America acts. It's very clear that an attack on any one agent means the whole of the Western world comes in. And then on top of that structure, you then need to correct the process of how to counter hypersonic weapons against carrier groups. So you need a defense alliance and the technology to make sure you can then fight in the Chinese sphere of influence without losing your carriers. If you can change those two things, the world suddenly looks like a very different place because you're pushing back from the brink of conflict. Now, the next thing you need to do is go, what the hell do you do with your financial markets? And the bottom line is, for America, it doesn't have a lot of options. It's blown a bubble up, it's over-leveraged, and it's got terrible commodity input problems. So it's all about creating, now on a government policy level, it's about creating government resilience, wartime type resilience with supply chains and support systems. That means that you're not as tipped over the edge from your input mechanisms. Now, that still isn't enough to stop it, but it's certainly enough to kind of maybe survive that process. How do you let the place down gently? Well, first of all, the Fed have to own up to what they've blown up, and then they have to realize that they've got to somehow find a way of arresting its decline without a total collapse. And there has been no historical precedent where a central bank has taken responsible for its total failure and then adapted because they're too invested. But if they would, and again, let's just imagine we're now landed in the Fed's chair. Now, what do? You let it fall and you try and arrest its fall so it doesn't go into free fall. You've got to go down because you can't avoid that because you need the collapse to reconstruct. But what you've got to avoid is a 29 style crash where everyone gets wiped out in 24 hours because that's truly destabilizing. So I think you're into management of a crisis rather than actually stopping a crisis. So you're looking at providing a parachute for the decline rather than a full-on, under 9.8 Gs hitting the ground. So that's really key. And I think there is one place that you have an option, and that is somewhere in this process, as equities fall, there will be a period when bonds rally. Now, I know I've advocated it for the UK. If I was the Chancellor of the UK, I'd be looking to issue billions and billions of dollars of 50-year debt as that rally took place to ensure defense is sustainable over a decade, to ensure transitory capital for key areas of the economy, knowing that you're going to go in a depression where you don't know where you can get your money from. So I think I would be enacting that strategy as equities fell and switching took place, and provide what we had war loan over here, which was 50-year stock at 3% or whatever. I'll be offering something like that, and I know full well that my assessments are with 20% inflation in the next 5 years, I'd inflate away the whole debt anyway. Mm-hmm. A unique opportunity, 50-year debt inflated over 3 years solves my immediate spending problems. That's how I'd manage my treasury. Mm-hmm. And underneath that, I'd use that money to lower taxation. And the next thing I do is create, and I need to think about this, but the social engineering that really facilitates entrepreneurial risk-taking and productivity creation. That means, people like Lord Beaverbrook solving your making fighters situation and finding the same parallels into public service, replacing people that, just do the same things every day with creative energies with the focus of increased productivities and efficiencies on a huge scale. Now, all of those things, if you do those things collectively, you're starting to push back the war issue. You're starting to create productivity. You're putting a parachute into a stock market that's falling anyway, and you're hoping to fund yourself as the bond market surges with a 50-year war loan, which then also allows you to come back and then bridge the gap with low taxation and stimulus. I think that's basically the whole key policy tenets you've got available. They're very bold, but there are no others.
Mm-hmm. Yeah, and kind of to your point, it seems like the debt bubble and the commodity scarcity are really linked a lot more than, let's say, we would like to think or most people think about, because we really can't service one or be able to deal with one without the other, right?
I mean, as long as you issue your debt, so it's fixed, it'll inflate away. But whatever floating part of your treasury portfolio you've got is going to come and bite you in the arse so badly. So, any treasurer of a nation that has opted for lots of floating rate at the moment, the gallows really awaits you of your career because you shouldn't have done it. Mm-hmm. And, conversely, fix it, watch high inflation rate eat away. It's perfect. I mean, it's your dream. So I think, yes, they're linked. And in the past, the peak of the commodity cycle has seen the biggest peak of interest rates. And they will do this time, give or take a bit. We interfered with them a lot through the exporting and manufacturing to China and the manipulation of issuance. So it won't just be a simple peak. My guess the peak may be well beyond the commodity price peak by 5 years or 6 years. So it goes on longer than you would think, rather than the 75 peak, which is coincident with the two. But it will correct itself over a longer period. But we've just got to get through this hideous series of entropic waves, as I call them, with adaptive strategies.
So, if we think about the amount of problems and debt that the US has, obviously China is in some ways a similar place. There has been so many people point to let's say the commercial debt bubble or the housing bubble in China. So, is their ability to be able to service those bubbles combined with the access to commodities that they have, what will help propel them forward or get past those other problems that they do have?
It's a lot of people talk about this parallel, and I would say it isn't a parallel, because using the 5 stages of empire model, there are 2 debt mounds systems produced. The first is in expansion. They borrow money against themselves to invest in their USP that gives them the ability to become a hegemony and a monopoly. Now, that's where China is. It's borrowed from itself, and it's invested in advanced production mechanisms and competitive mechanisms that give it a chance to become the global leader. America's did that once, and that was what it did up until the end of the Second World War. It became a monopoly and paid it all back. But America's debt mound is a function of lower productivity. And that lower productivity has meant increased leverage to compensate. And the result of that is it's a completely different debt mound. So you see a lot of people projecting Western, debt issues and dynamics on China, saying they're going to go first. And I was saying there's no way they're going first, because they never do. What they are going to do is be impelled to make their challenge because they borrowed the money to make the hegemonic challenge. That's why it's there. So it's actually America that's more vulnerable than China. They're not the same thing, even though they look comparable. And I think China's far more stable than America in this situation.
Mm-hmm. Yeah, I just wanted to get a sense of, where China's problems do lie, I guess. And exactly as you said, they're invested in actual productive capacity versus being on the downside,
maintaining a non-productive system.
Mm-hmm. So, considering all these factors that we talked about here today, David, and your broad view of cycle theory and geopolitics, what are some of the most important assets or steps that people should take in order to protect themselves in this time?
Look, I'm always wary of over radio saying people should do this or that, mm-hmm. But I'm saying generically. None of my clients, are long of equities. If they're long of bonds, it's against a short-term low, expecting a reflex switch. So none of my clients are in the equity business if they listen to my advice, and they are looking for a trade in bonds higher before the big sell and debt crisis. They're not long of gold or silver or Bitcoin. In fact, they're short of them. Short of Bitcoin from the highs, looking for 23 to 15K. And now gold and silver short for the trade for the flush out, looking to buy lower. So it's a delicate walking through the minefield experience right now. Mm-hmm. I think there will be a time when there was a very precise buy when the washout of safe havens is completed, which will give the most incredible returns. But believe me, at that stage in the public domain, owning gold and silver and Bitcoin will be absolutely the last thing most people want to do. And that's when they suddenly become attractive if their price patterns confirm the lows in place.
Mm-hmm. And really that points towards the difference between sentiment and fundamentals in the markets, and that dichotomy or that fight that we have to make and learn from and combat our investor psychology, right?
So there's in the front of this, I'm creating a book about trading psychology and mechanisms. And it starts with a very simple premise: price is everything, right? There are no such thing as fundamentals. They're the stories people tell to justify price. And when you have a long-term rally, like in equities, people can tell whatever story they want. The fairy godmother came in and had the milk first. Whatever it is, they'll tell stories, but the trend actually goes up, and they think their story is real because it goes up. The truth is, when it starts to go down, none of those stories have any validity because they never had any in the first place. So I'm very wary of what is fundamental. There is a fundamental property of markets. They are a collective organism that is unconscious, that transacts prices with a net outcome. And prices are determined of collective psychology and how it interprets pieces of information that it thinks are real. So, for example, if you look at gap accounting and all of those gap accounted companies that went through the roof in the tech thing, well, there's forensic accounting right now that says they weren't even close to reality. So basically, people were buying things that weren't linked to reality, but it still went up. So the bottom line is it's a collective delusion to buy and sell. There are no things as fundamentals. There are fundamentals in the universe, like the forces of gravity or the forces of electro attraction, but economics doesn't have fundamentals. It's full of perceptions. I think it's really important. And I often ponder, how the world perceives market behavior. And, I'm a physicist by training. So I look at all these people who are economics graduates or, history graduates who then go into the markets telling me that they're, it's all about economics and it's all about, it's no different from a witch on a broomstick when you look at the reality of economics. The hard fact is we trade price. If you model price correctly, then you have understanding and predictability. And why does that work? It's because we're a collective organism. Mm. And I'm amazed how few people truly comprehend that price is everything.
I know I spoke to Rick Rule recently, and he gave me the example of the wife of the couple, let's say, buying more, I think it was tuna fish when it goes on sale, and the husband thinking the exact opposite way when gold goes on sale or whatever asset that he's looking at. And really, I think that's a great way to analogize the way that we have to think about some of these things. And as you say, being able to model price and cycles properly and, hopefully unemotionally and, from a sober point of view so that we can actually understand where markets are headed, I think is going to be invaluable in this time.
What we're studying is human collective behavioral patterns. Mm-hmm. That's what markets are. They're the human collective behavioral patterns in quantifiable form that allow you to study their behaviors. And I've for 40 years, I've been doing it. I'm just amazed. The people that tend to study price are not scientists. So what's interesting is, they're not perhaps as logical as they could be. The people that don't believe in price are certainly not scientists. It's the weirdest conundrum. It's no different from thinking the vapors, gave you sickness, but it was malaria. We live in the dark ages in understanding what we're really investing in. And I think that after this process of total collapse, the world of capitalism and markets as we understand it will be completely different. We're at the end of this process of free capital, manipulated capital, whatever we call it, because when everyone loses from it, their enfranchisement in the system is going to be very limited.
It's funny that you mentioned the malaria example, because I actually saw that yesterday where it was like 99 out of 100 scientists or some crazy stat all believed one thing. And there were 2 that believed the exact opposite, that it was mosquitoes that actually caused malaria. Yeah. Turns out they were right. I think the ability to change our thinking and hopefully identify symptoms like that and to make those correct assessments would be, again, invaluable in this time.
You see what's interesting, and you take Helicobacter, for example, as the source of ulcers, and an Australian group found this out. And everyone said, you must be kidding, ulcers about stress. No, it's a particular bacteria in your gut and it causes ulcers. That was the beginning of the relationship between gut flora and disease. And there are like 40 gut bacteria and 40 viruses that are linked to cancers now. Like that's, real science in evidence cross-relation. Now, that's okay because you've got scientific groups that are enfranchised with their ideas or not, resistant as a collective versus new ideas. It's even harder in markets because the very people that are making these observations are also part of the collective and blind to it. And the collective is so powerful because of that greed-fear dynamic, they are completely blind to what happens. What I always think is interesting is no one remembers when they do something under the influence of a collective behavioral pattern because there's no part in our brain that stores the emotional pattern. So we just carry on under the control of this collective dynamic, completely blind to the fact that our actions and feelings weren't our own. And there's no way of storing it apart from you wake up and go, how did I end up in that part of the house? And I find that absolutely fascinating.
Yeah, it kind of reminds me of a book that I've read. I think it's called The Art of Thinking Clearly, and how we should actually analyze our successes just as thoroughly as we analyze any type of failure, because there are times where people just get lucky. And, understanding the difference between getting lucky and being right about your assessment.
I couldn't agree absolutely more. I mean, just think how many people got lucky and then truly got wiped out. Like success, failures, every part of our cycle of activity demands to be assessed. We should do it in relationships, we should do it in business, we should do it in markets. And if you really want to grow, that's where growth comes from. And, that doesn't mean that phenomenal outcome means success. How many wealthy people out there who are phenomenally wealthy think they're really clever? And I have to say, like most of the high net worth individuals and groups are the worst. They think they're so clever for their wealth. They rode this giant cycle up and the same blindness will see it destroyed. And that fascinates me. And I always, when I speak to clients or I speak to high net worth groups, I'm always fascinated to see if there's any awareness of how they got there. And I would say right now, I've never seen less awareness in a wealthy group of people, and they don't understand the wave they rode and the wave that'll take them down.
Well, David, it just goes to show you that, just because we're focused on markets or gold and silver or whatever example you want to choose, there are lessons that we can take from all of these things and apply to other parts of our lives, right?
And that's what's really lovely about markets. And you can do it in any part of your life. If you're into that cycle of performance, understanding, that's how you grow. And that's the growthful kind of search, which makes life really fascinating. And then if you find something to share it, not to say I did it, but then to watch the response. And that's why I like to share what I do, because hopefully it'll bring greater awareness to the decisions we take in the future. And I have to say, every lesson I've ever learned has always cost me something, emotionally, money, an arm or a leg, or some form of, disturbing activity. So giving it value after paying the price is part of it, that you benefit, and also sharing it so other people can get ahead of you first. I think that's a very important human quality that got us to where we are. And in a system that serves itself more than the system it's part of, I think we need to really remember that.
Well, David, I think that's a pretty good place to kind of wrap up today's conversation. Is there any other points you'd like to touch on or share with us?
Well,
before we do?
Tom, we could talk forever, right? I think for you guys with gold and silver, if you're interested more in my assessment of how to manage the sort of safe haven washout and where to go, that's what the site's all about. And you can access it, look up, and there's a whole load of subscription-based levels that let you do that. And I think singly, that sector is the place of redemption, because I do think gold will break through the highs, 3,000, 4,000. It won't be enough to go round. The trick is you've got to be in the trade, survive the dip, and then put your leverage and put yourself into it. It's the right place. But right now, for people owning it, just be prepared for some pain before it comes right.
And of course, your website, David Murrin, MURRIN.co.uk, and Twitter, Global Forecaster, FORCASTR. Of course, we'll have all of those links in the show notes. David, thanks so much for your time today. Always appreciate it.
It's a pleasure, Tom. Look forward to number 3.
Absolutely. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance.
Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.